period of time. Now, this again was one of the intents of the RBI. Earlier, in back in 2020, 2016, there was this particular exemption as well, this particular categorization that the RBI had introduced at the time of seeking registrations from RBI as an NBFC. Earlier, it was just a non-deposit taking or a deposit taking NBFC. But under non-deposit taking NBFC itself, there was two categories or two types that the RBI had introduced to ensure that such NBFCs who don't have access to public funds or who don't have any customer interface, they may not have a very rigid or a very detailed kind of registration process, and they could have got easily registered as an NBFC. So this particular exemption that was introduced by introducing the concept of type 1 NBFC was in 2016. Even before that, there were NBFCs that may have availed the license, may have got the license as NBFCs, but they were not having either customer interface. They were purely investment companies. It was my own funds that I was investing, and I was not taking any customer interface. I was not borrowing from anywhere. That was also a very common practice. However, the recognition was only given after 2016. Now, the intent now that the RBI has introduced is to allow such NBFCs to deregister or come out of the regulatory purview completely. Now, this exemption again is not just restricted to type 1, but even those NBFCs that satisfy the classification for type 1, which is twofold. One, they should not have any customer interface, and two, they should not have any public funds access. If both these conditions are fulfilled, and again, they have an asset size of less than 1,000 crores, in that case, they can claim the deregistration exemption. So the intent is to deregulate such kind of pure investment companies that are not dealing with public, they are not handling any public funds, they are not interacting with customers. So these NBFCs who just have their own funds and they're simply investing or carrying out investment activities, they need not be strictly regulated and can be taken outside the purview of regulatory framework.
Right. So, can I say that a lot of NBFCs will actually, get out of the RBI ambit, and the number of NBFCs will reduce significantly?
So right now we have more than 9,000 NBFCs. If we look at the data, NBFCs registered as type 1 will be quite a handful. It will be less than 500 NBFCs who have registration as type 1. But even if you don't register as type 1, you can still claim this benefit of deregistration in case you are satisfying these conditions. So these NBFCs, in our view, there will be a lot of such NBFCs who are purely into investment, because even if you look at the scale-based approach that was introduced, so at that point of time also an analysis was done wherein we realized that most of the NBFCs, more than I think 8,000 NBFCs will fall in the base layer. So that base layer of the pyramid is the one which is the most bulky and the most in terms of quantum of NBFCs. And base layer NBFCs already have an asset size less than 1,000 crores. Most of them may not be into day-to-day lending activities as such. They are purely investment companies. So they will be able to, it is an option available to them. They can claim this particular exemption.
Right. So you are saying that it is an option to such NBFCs. So why will an NBFC not go for this option? Why will it still, continue to hold the NBFC registration and comply with all the RBI norms?
So I think this is very interesting because when the drafts were issued and we had conducted various sessions in Kolkata, which is the hub of NBFCs, the view that we got from most of the practitioners was that they are not wanting to give up this particular license that they have. Getting license, we all realize, is very difficult. So at the same time, if in case you want to retain that license, in case your business model is such that in future you may want to get into such kind of activities, you would not want to again go through that registration process, so you would want to retain that license. Even type 1 NBFCs avail a lot of exemptions from regulatory provisions. They are already exempted from a lot of regulatory requirements and compliances. So in case you can do the bare minimum regulations and compliances and still retain the registration, that is a call that the NBFC will have to take. But in case you want to come out of it completely, then this is an option. And when I say it is an option, the option again is at the discretion of the RBI. So it is the regulator who will decide whether you can claim that exemption or not. You have to make an application, you will have to give them the details, you will have to uh, pass a board resolution, you will have to resolve that you're not intending to carry out such activities. Your business model should satisfy that yes, these conditions are fulfilled and you will be able to sustain your business without having public funds and customer interface. Only then will the regulator allow you to claim this deregistration.
Right. So you spoke about three conditions. One is not having public funds. Then we have not having customer interface. And the third condition is with respect to the asset size. I should have an asset size of less than 1,000 crores. So firstly, with respect to public funds and customer interface, ma'am, what do we understand by these terminologies? Public funds and customer.
I think this is very interesting and a total game changer, not just for unregistered type 1 NBFCs, but these definitions, the changes have been introduced in the master directions for registration and scale-based regulatory framework. So this will be applicable for all NBFCs, even if those NBFCs who are registered as type 2, but they also intend to claim certain exemptions pursuant to the fact that they don't have public funds or they don't have customer interface. Now, the understanding of these two terms will change completely. Let us take it one by one. First is public funds.
Right.
That means from where is the money coming from? The term itself was defined by the RBI earlier, and it had the six main components of a public fund. One, public deposit, which was not very common because non-deposit taking NBFCs are not taking public deposits. Second, bank finance, which is the most common form of availing funding from outside, borrowing in any form. Third, intercorporate borrowings or deposit. So even if I'm borrowing from any other company, that was considered as public funds. Fourth and fifth was issuance of commercial papers, debentures. Now, this again was an indicative list. It was stated that any funding availed from outside or an outside liability, and these are the various forms. And it could be directly or indirectly. Now, what has been clarified under the changes is that first, even if I'm availing funds from my directors or my shareholders, they are my own, it will still be considered as having access to public funds because any loan from director or shareholder under deposit regulations, if we remember, there is an exemption if the funds are being taken from directors or shareholders from the own funds. If it is my own money, I haven't borrowed and I am giving you a loan or I'm giving you, I'm investing in debentures. That is exempted and not considered as public deposit. But it will be considered as public funds, even if it is from your own funds. So any money that you're taking from directors and shareholders. Next important clarification here is if I have availed funds from my own group companies. My group company is not someone who is giving funds from outside. It is my very own either subsidiary, holding, associate, JV, having the same brand name. Any of these entities in my group, in case they are providing funds to me, and that in itself has availed borrowings or has access to public funds, that will be considered as indirect access to public funds. This also RBI has stated will be considered as having access to public funds. So it is directly as well as indirectly. Now, this indirect, however, is an explanation to the definition itself of public funds. So I may ask you if it is a equity funding that is coming into the company from a group company, will that be considered as public funds?
Ideally, it should not be considered as public funds, ma'am. But there is a separate document that RBI has issued along with this particular draft and along with this particular directions. So that document basically states the public comments on the draft direction. So earlier we had the draft directions on unregistered type 1. and public gave their comments. One of the questions asked, interestingly, was exactly this: whether equity funds from group companies would be construed as public funds in case the group company has access to public funds.
Right.
There, RBI has clarified that yes, it will be, and it has not accepted the suggestion of the public to, not classify equity funding as public funds. So here again, while the regulations per se, the directions per se do not very explicitly mention equity funds as public funds, equity from group companies as public funds, we cannot completely disregard these.
So it is like hitting yourself with the axe. अपने खुद के पाँव पे कुल्हाड़ी मारना. Because we, in the first place, this particular provision that was there. So there was a definition of public funds, and below that, the explanation very clearly mentioned that indirect access. So I have to read that indirect access by way of at least the funds should in the first place be coming in the way of public funds, the various modes of public funds. It could have been borrowings, it could have been debentures that the or commercial papers in which the group companies investing in. If that is the case, then I will see whether the group company in turn also has access to public funds or not. Equity investment in itself is considered as an own fund for the NBFC. I will not be checking the I'll not go beyond my shareholders and check from where are they bringing the funds. That was never the intent and never done in the past as well. Because shareholders' funds is considered as my own funds. So I'm not checking that where is the shareholder getting its funds from. But if it was my own company, my group company who is giving me funding, I may not have said that it is an outside source. But if that own group company is also having access to public funds, I'll still have to consider it as an indirect access to public funds. Second terminology that you had asked was customer interface. Now, customer interface very clearly is an interaction with the customers. Interactions could be through account-based relationship or any sort of selling of mutual funds, distribution of insurance and mutual funds, any kind of activity, any of these activities will be considered as having access to customer interface. For that matter, even NBFCs who are acting as LSPs will be said to be having customer interface. So those NBFCs who want to act as LSPs may not be then uh, be able to say that they don't have any customer interface. Even if I am lending to my own directors or shareholders, that again is a transaction that is considered as customer interface. Group companies, in case I'm providing any funding, that is again a customer interface. So, customer interface is not someone who is an outsider per se for me. It is not someone whom I am treating as a guest. Even my own family, if I'm lending to them, my director, shareholder, group company, that is also customer interface. The reasoning that the RBI has given over there is because you have to report them under KYC, you have to carry out KYC, you have to report them to CICs, you have to carry out the asset classification and provisioning. All the IREC requirements are also applicable. So if you are lending, if you are having that kind of a relationship, then in that case, it will be considered as having customer interface. The only exemption I think is loan to employees that will not be considered as having customer interface.
Right. So these three conditions, I'll have to check on exactly when do I say that I am eligible for claiming this exemption?
Okay, when do I say before that, who can say this?
Right.
So we are clear that there are two kind of entities who can claim this exemption.
Right.
One, those who are registered as type 1, and second, those who are even if not registered, but they are satisfying the condition of not having any customer interface or public. These two entities can claim exemption. The effective date for this particular notification is 1st of July. As of 1st of July, if I'm satisfying these conditions and my asset size based on my latest financials, which is 31st March 2026, is less than 1000 crores, I am eligible to claim exemption. However, if and that application can be done till December. Now, there could be NBFCs who right now may not be satisfying these conditions, may have public funds or may have customer interface. If on a later date, or there are new entities, new NBFCs who are seeking registration. So, new entities who want to seek registration as an NBFC, they will have to first examine if they want to just carry out investment activities they need not take registration. They can simply claim this exemption from day one. So I'll not register. But what about existing NBFCs? Existing NBFCs, either they are satisfying these conditions from the effective date, and based on the financials, the asset size will be checked based on the latest financials. And in future also, if you satisfy these conditions, you will have to see that as on the date, if you're satisfying these conditions and your latest financials are showing asset size of less than 1,000 crores, you will be able to claim this exemption. You will be at least be able to apply for claiming this exemption.
Right. You discussed one date of December 31st, right? So
Right.
I have a period of 6 months.
You have
But does it mean, let's say I am currently satisfying the criteria, all three criterias, but I have decided not to sort of surrender my license and opt for this unregistered type 1 NBFC classification. And later on, next year, I actually decide go for it. So I can still do that, right?
Right. So this condition for claiming exemption is coming from section 65A. So any NBFC at any point of time, the regulations have given you this particular window of 6 months for existing entities in case they want to apply. But even in future, in case you satisfy these conditions, you can claim the exemption at a later date. So if today you decide you don't want it, later on you realize that I want to, you can still claim it provided you are satisfying those conditions.
Right. RBI has also asked for last 3 years financial statements along with the application. So does it in any way imply that I'll have to sort of comply with the no PF, no CI condition for last 3 financial years as well?
Okay, so RBI has asked for your original COR, RBI has asked for your 3 financial years, RBI has asked for a business model that is satisfied. But these are for the purpose of RBI evaluation of your application. Now, even if there are past sins that has been done or in a way that you have had access to public funds, or you may have had any customer interface, you may have given 1 or 2 loans, that will not have an impact on your application because the position as on date and in future will be considered. As on date, you should have a very clean chit, you should not have any spots, and in future also you will have to resolve that you will not have any PF and CI.
Right. Ma'am, can you take us broadly through the process of claiming such exemption?
I think the process is quite simple right now. All the applications that we are submitting to RBI is through the Prava portal. So on the Prava portal itself, you will have to make an application on the company's letterhead, submitting all these details, the COR, last three audited financials, board resolution stating that you will not have any, you don't have, and you will not have. So it's both present as well as future. Even your statutory auditor has to certify that you don't have any public funds and customer interface, a statement to this fact that what was the status of your public funds and customer interface in the last 3 years. Though it is to provide an overview that yes, what was the past, but I don't think that should have an impact on the status of the application or the decision that the RBI will take. And based on this, certain undertaking as well that the directors of the company or the NBFC will have to give, that they will ensure that they are satisfying these conditions, they are disclosing it as a part of your financials. Every year you're passing this resolution that you will, like we pass a resolution that will not have access, will not accept public deposit. This will be an additional resolution for those which claim deregistration.
Right. Um, when you say the asset size criteria of 1,000 crores has to be satisfied, will I see this criteria on a standalone basis or do I comply it on a consolidated basis? Do I, let's say in my group, I have two NBFCs actually qualifying individually for this criteria. So do I aggregate the asset size or do I see it?
So I think this, when the draft directions were issued, this was a, I think, confusion. And we had also made a representation to the RBI to clarify these stands because the concept of multiple NBFCs is already there. It is there for registered NBFCs. There's no reason why that concept should not be there for claiming this exemption. Otherwise, it is very easy for larger groups to just divide the asset size between multiple NBFCs and all of them can claim exemption. RBI has now clarified that the aggregation rule will be applicable even for unregistered NBFCs. So all the NBFCs who are claiming that they are satisfying these conditions for seeking deregistration, these unregistered type 1 NBFCs, asset size of these NBFCs will be consolidated to check if it is more than 1000 crores or not. So only if it is in aggregate less than 1000 crore, you will be eligible to seek deregistration.
Right. Also, let's say I have about one or two NBFCs, two unregistered type 1 NBFCs. Apart from that, I have other entities in my group, which are currently classified as base-led entities since they have the asset size of less than 1000. So do I also consolidate the asset size of these unregistered type 1 NBFCs with them to actually determine their VLML status?
No, so that I think was already clarified at the time of draft itself. When I'm aggregating the asset size for determining the classification of a registered NBFC, at that point of time, I will be aggregating only the asset size of registered NBFCs. So all the registered NBFCs asset size will be aggregated to determine if they are falling in the middle layer or not. For upper layer classification, that is not applicable. But from base layer to middle layer, you will have to aggregate the asset size of all registered NBFCs.
Right. And so basically type 1 registered type 1 NBFCs will be consolidated,
Right.
unregistered ones will not be consolidated.
Absolutely.
Also, although type 1 will be consolidated, type 1 by default do fall under the base layer.
Right. So this is also an important point because even if I am aggregating the asset size of registered type 1, but by virtue of the exemption that they have, you will still, that particular entity will still fall in base layer, even though the other group entity might be upgraded to middle layer because of aggregation. Right.
Right. What are the some important post-exemption compliances? I think you were discussing this earlier as well. But ma'am, if you could give us exact
post-exemption, keep satisfying this condition that you will not have access to public funds, you will not avail customer interface, and you have an asset size below 1000 crores. You pass a resolution every year and disclosure. So I think four conditions: asset size, not having customer interface, and public funds. I'm considering this as a one requirement because it is a twin condition. Both of these have to be satisfied. Third is passing of board resolution annually. And fourth is disclosure in your financials. In case you don't, if there's a breach or anything, there's an exception report also, which the statutory auditor will have to ensure.
Right. Also, let's say I do qualify as an unregistered type 1 NBFC. I don't want to lend to anyone. I am happy doing my own investments. However, I want to do some collection, some recovery activities for my group companies. So, is it something that can be done?
So this is acting as a collection agent, LSP, sourcing agent. All these involve interaction with customer, and type 1 NBFCs cannot have either my customers or someone else's customer. Ultimately, if I'm having those interactions, I am having customer interface is what the RBI has defined it to be. So even if so in case of unregistered type 1 NBFCs, you will no longer be eligible to act as an LSP, recovery agent, servicing agent for other lenders or regulated entities.
The restriction is also with respect to selling of insurance or
That's
mutual
also
fund
the distribution. Yes, we have discussed. Yes, that's also there.
Right. So I think that's all from my side as of now.
One important thing, I think, just to highlight, there were a lot of exemptions that were available to NBFCs who did not have access to public funds or who did not have access to customer interface. Mostly all these exemptions were mentioned as NBFCs not having public fund and customer interface. Now there is a change, and everywhere it will be mentioned as NBFCs registered as type 1. What happens to those NBFCs who are not registered? Because as we discussed, type registered NBFCs are quite handful. But those who are satisfying these conditions, not necessarily registered as type 1, what happens to them? Will they be able to claim those exemptions or not? In most of the cases, you will see exemptions to NBFCs also under other laws, be it 186 of the Companies Act, Deposit Regulation 73 of the Companies Act, or even under GST and Income Tax Act. There are a couple of exemptions that are available to NBFCs. Over there, you will see mostly they refer to it as NBFCs and not registered NBFCs.
Right.
So even unregistered type 1 NBFCs will be able to enjoy those exemptions to the extent the exemption is available to defined NBFCs or those who satisfy the condition to be called as an NBFC. Registration is not important. Under RBI regulations as well, there are exemptions that were available to type 1 and now it will be available to type 1 NBFCs. But in most of the cases, in case you don't have public funds, there are a couple of exemptions that will still be applicable for base layer NBFCs from prudential requirements, from requirements to from the regulations with respect to investment in AIFs, from LEI for borrower requirement, and several other such requirements that will still be available for NBFCs, not necessarily registered as type 1, but not having public fund. And not having customer interface, you are exempted from a whole lot of customer oriented regulations like FPC, KYC, registering with the credit information company CICs. These will be exempted from those who don't have access to public funds, even if they are not registered as type. So I think this is important to know.
Right. Right. So while you mentioned that KYC is exempt for unregistered type 1 NBFCs, I'll have to still comply with the AML compliance.
Now, AML compliances earlier, now this again was a confusion. This again was a requirement in the draft. RBI had stated that unregistered NBFCs will be exempted from 45IA. Now, it has also included 45IC, which was transfer of profit to reserve. That is also an exemption that will be available. But PMLA compliances, which is with respect to having a person who is being designated as a principal officer, that is something that still needs to be, or the FIUIND registration, that is still applicable for unregistered NBFCs. And RBI may at any point of time even come out with regulations for unregulated NBFCs. So that is something that RBI has kept it open and it has its discretion. Even if it is providing you a relaxation for seeking registration, it can still at any point of time come up with certain regulatory or compliance requirement even for unregistered NBFCs.
Right. I'll just check if we have any questions. Participants, in case you have any questions, you can just write down, or you can, you may speak on.
Yeah, in case anyone would want to ask any questions, they can.
I have one question from Nitin. So Nitin, can you please explain the term public funds with few practical examples? May please also describe the term customer interface with practical examples.
Practical examples, I think, like we discussed, borrowings from bank, borrowings from companies, if I'm issuing debentures, in case I'm availing any sort of instrument through which I'm raising funding, all these will be considered as public funds. Even if I'm availing a borrowing from my group company or my director has lent money to me, any sort of borrowing, it is not a term loan, it could be any sort of loan, lending transaction, money which you have given and I owe you back. That will be considered as public fund. These would be the practical examples for public fund. And for customer interface, like we discussed, lending activities, distribution of mutual funds or provident funds or credit cards, servicing customers, carrying out activities as an LSP, all these will be considered as customer interface.
Just one follow-up question. How so when if I have, let's say I have made investments in NCDs, will that be construed as customer interface for me?
Okay. Now, NCD investments would mean that I am investing in the debt of a company. Investments per se are not considered as customer interface.
Right.
When I'm investing in the debt of a company, I'm actually not interacting with that company because you may have uh, issued debentures, and as an investment option, I'm actually investing in that. Also, I'll have to see that there is no sort of service that I'll have to provide to you. If in case I'm lending to a customer, there are services that I have to provide. I have to provide you with a whole lot of disclosures. I have to provide you with a whole lot of statement of account on a quarterly basis. I have to provide you with invoices. In case I'm making investment, I'm simply investing funds in you, and as per the returns, I will be getting back the returns. So that is not, in my view, considered as a customer as having customer interface.
Right. How does one confirm that an NBFC has or had customer interface from its audited financials?
From an audited financial, I think what you can look at is if you have any debtors, if you have any sort of any lending lending exposure that you have undertaken, or in case you have earned income by way of commission or by way of fees by carrying out such activities which requires you to interact with customers. These are the two, I think, checkpoints that one can make. And otherwise, you will have to again go through the kind of activities that the company is carrying out and not just rely on the financials. Ask the company what are the activities that you're carrying out, which is helping you in creation of assets or earning income. Both these things, I think, if you're checking, you will be able to determine whether there is any sort of customer interface.
Right. If an NBFC is registered as an ICC, is engaged solely in investment activities and meets the prescribed conditions for deregistration, can it also apply for deregistration? So it's registered as an ICC, they are saying, and it's solely engaged in investment criteria, investment condition, investments, and or meets all the eligibility criteria.
Can it apply? Yes, it can apply even existing NBFCs. Even if you don't have the registration as type 1,
Right.
you can still apply if you are satisfying all the conditions. But the fate of the application will be in the hands of the RBI. It is in RBI's, at the RBI's discretion. Right.
Can registered CICs apply for deregistration? Additionally, can you clarify what is the difference that remains between unregistered CICs versus type 1 NBFCs which deregisters itself?
Now, this is also very interesting. The concept of core investment companies itself says that these are category of NBFCs whose exposure is restricted to group. They are taking an exposure only on their group companies. The exposure can be in the form of not just investment, but even lending exposure. There, I would not say that I don't have any customer interface because I could be lending to my group. In RBI's viewpoint, even this will be considered as customer interface if I'm lending to my group. So that is a customer interface by a core investment company, just that it is restricting its exposure only to the group. Whereas on the other hand, if I look at a type 1 NBFC, I can have investment exposures outside the group. I will be having investment exposures outside the group, and I will not be having any sort of lending exposure. So the difference, the key difference between both of these would be the kind of exposure that the NBFC or the entity is intending to take. If it is wanting to restrict itself to the group in the form of either investment or lending, it should maybe seek registration as CIC if it is more than 100 crore. In case you remain below 100 crore and you don't have public funds, I think you can even claim the deregistration as a CIC. So you'll remain unregistered. And over there also, you will not be regulated by the RBI. But if your exposure will be outside the group and the exposure is only in the form of investment, and you're satisfying the other conditions, that is less than 1,000 crore is your asset size, in that case, you can claim the deregistration or exemption from registration. Right.
How long is deregistration expected to take?
Now, this again, since the ball will be in the RBI's court, so the RBI for registration, it is usually 3 to 6 months and even stretches up to an year or so. So for deregistration also, I'm thinking a similar kind of a timeline or maybe a shorter. Right now, after the Prava portal has been implemented, I think the applications are processed faster as compared to the earlier physical approach. So it might take less than maybe 6 months or 3 months.
How does this impact exemption available to NBFCs with respect to the 10% investment limit in AIFs that were earlier available to NBFCs that do not have access to public funds and customer interface or customer interface?
So I think investment, like we discussed, there were various exemptions that were available to NBFCs that did not have access to public funds or did not have customer interface. One such exemption was also with respect to investment in AIF, there are limits applicable on NBFCs. That particular exemption will now be applicable for type 1 surely, because RBI has proposed to replace all those exemptions that were available to NBFCs not having public funds and customer interface with the wording saying it is registered as type 1. Otherwise, there are also exemptions that could be applicable for NBFCs either not having public funds or customer interface. So that has to be checked based on what particular requirement it is. For certain requirements, it could be applicable even if you don't have registration as type 1, but maybe you are not having public funds, access to public funds. So that exemption could be made available to even those NBFCs. So exemptions would be in the following manner. One, for type 1 NBFCs. Second, it could be for registered NBFCs that are not having public funds. Third, it could be for registered NBFCs not having customer interface. So various exemptions are there in its notification. Even for base layer, for that matter, there are various exemptions. So this could be analyzed based on what particular exemption or requirement you are wanting to claim exemption for.
Right. That's all the questions we have. In case any other participant wants to speak, or if there are any other, we have one more question. Um, is an NBFC required to aggregate the AUM of other group NBFCs when determining whether it meets the 1,000 crore AUM threshold? Group company is the base layer company there.
Yes, as we discussed, multiple NBFC concept is already there. So for all NBFCs, whenever you are wanting to determine which layer you are falling into, you will have to do a consolidation of all the NBFCs in the group and determine whether it is in the base layer or middle layer, subject to certain NBFCs who will always remain in the base layer, even if they cross on an aggregate basis the threshold of 1,000 crores, which is type 1 registered NBFCs.
Whether a company only created for investing will get exemption.
That precisely is the concept of type 1. If you're just purely an investment company and it is your own funds, you will be able to, provided you are satisfying the other conditions as well.
Does deregistration, whether deregistration is equivalent to no regulation whatsoever by RBI?
I will not be able to say that completely, because RBI has said that you are exempted from provisions of registration, 45IA, and transfer of reserve fund, 45IC. So pursuant to registration, there are compliances. Since you are exempted from registration, the compliances are not applicable. But then RBI has kept a open hand in that, and it may at any point of time come out with certain requirements or compliances or anything for even unregistered, because they are still NBFCs, just that RBI has exempted. So you need to understand, if we look at the larger set, it is still an NBFC, just that the smaller set of registered NBFCs who are monitored, governed regularly by the RBI, you are falling out of that. So you are in the outer circle, just not in the inner circle.
Right. Right. So this will be so Ashish sir, this will be uploaded over YouTube. So maybe you can watch it there. There's one more question. So even investing into debt from tax perspective, this will be an advantage.
Yeah, even if you are investing from tax perspective, whether it is an advantage or not, that depends on the business model of the company. But yes, investing activities of purely investment companies out of your own funds, that will be considered as satisfying these conditions. So I think we'll at this stage, thanks everyone for joining. Thank you everyone.
Thank you.